Top three things in my notebook. Number one, the price of oil. Number two, the 10-year bond yield. And number three, U.S. equity market sentiment, which is becoming epic at this point. So again, looking at oil, which is leading indicator number one for what? For deflation. Now again, oil, people have been looking for the bounce. There's a massive net long position in CFTC futures and options contracts. Still over 276,000 net longs on that front. And again, people are looking for the bounce. They've been looking for the bounce. They don't understand the complex of deflation. Again, deflation is a very nasty signal. It's bad for energy stocks. It's bad for energy bonds. And yes, we think the oil price goes lower. Intermediate term support, no support really to $64 WTI and falling from there. Now, point number two would be the 10-year bond yield. Now, something not so funny happened on the way to the forum to those poor bastards who are along the TBT, yeah, you, yeah, and me, on a better than expected quote-unquote GDP number yesterday. Newsflash, it wasn't better than expected if you look at it the way that we model it, which has not changed for 6 years, which is on a year-over-year basis. Now, again, going totally revolutionary on you. Again, modeling things on a year-over-year basis isn't that complicated, other than for those who are just navel-gazing at headlines that are hitting your screen currently on any macro data point front. So again, rate of change, GDP growth slowed in the third quarter. It slowed in the first quarter, the second quarter, and it will slow again in the fourth quarter. What happens when growth slows in rate of change terms? Put a big smile on your face. Bond yields fall. The TLT goes up. The EDV goes up, so we reiterate the bull case and a massive asset allocation position, net long position, almost fully loaded in our model to the long bond, and liking that. Finally, equity market sentiment. Now this is becoming epic beyond epic. Now again, what we'd like to look at, and again, I'll give you two different things. Front month volatility from an equity market perspective, looking at the VIX. Immediate term support is 1216. So we're at the low end of that sentiment reading. We're at the highest end on what we call the bull-bear spread. So again, bull-bear spread comes out every Wednesday. Again, it's an II survey that surveys, are you bullish or are you bearish on my flow? Again, are you bullish? Yes, of course people are bullish. Are you bearish? There are no bears left. In the survey currently, 13.8% of people admitted that they were bearish. That is the all-time low in bears. All-time low. The spread between bulls and bears is 4,270 basis points wide. That's up 108% since when the bulls were in the fetal position on October the 13th. Is sentiment peaking? I just told you so. Those are your top three things.